Assalamu alaikum. Welcome to lecture 3 of APM. So this is performance hierarchy. In this lecture we are going to go through under the performance hierarchy the concept of performance hierarchy. What is the organizational purpose? Then we are going to go through mission statement. What are the contents of mission statement? The impact on performance management, impact on performance measurement, then cooperative objectives, linking strategies and operations, smart objectives, then use of CSF, that is critical success factor. What are the sources of CSF? Alternative classifications, examples of this, and CSF and KPI. Then under operational performance, what is the meaning of operation, the objectives, importance of planning and control activities, the performance planning gap. And then we are going to conclude with the syllabus, summary, and technical articles. So this is the graphical representation. The main objective of this lecture is to understand how to set objectives at different levels. A, B, the critical success factor. Okay. So under performance hierarchy, first is mission statement, then corporate objectives, then the CSF and operational performance. These are the four areas we are going to cover in this lecture. So starting with the concept of performance hierarchy. Performance hierarchy means you are setting an objective, okay, and the measurement of that performance throughout the organization. So you start with an overall purpose. That's how you start. It's like you start with a mission. Before you develop any detailed objectives or targets or CFS or KPIs, you need an overall purpose. That's your mission first, which is at the top of the hierarchy. That's why it is known as performance hierarchy. Okay. The missions are set at the top of the hierarchy. Then the objectives will be longer term, but they are less detailed. And further down the hierarchy, you will see objectives are being met, and how are you going to measure those performance will be more detailed, and they will be for shorter term. Okay. So the organizational purpose, as part of the corporate strategic planning of an organization, the directors will define the mission, the vision, and the objective. What is mission? It is the overall purpose of your organization, why your organization exists, what it produces. Okay. It's like an identity of the organization, the activities that they do. Then vision. Vision is a forward looking statement. It's like where you want to be, where do you see yourself in the future. Okay. Next, corporate objectives. It's like you are stating what your mission means in a practical term to the primary stakeholder groups. For example, to increase the company's market value. See, your mission is to be number one. Okay. Corporate objective would be to increase the market share by increase the market share more by so and so percentage. That's your objective, corporate objective. So you're defining or quantifying your mission through corporate objectives. That's how you're going to measure whether you are achieving the corporate objective or not. Okay. Now the contents of the mission statement. Mission statements basically they are formal mission statement. Okay. Many organizations you will see they will have this. These are often published in the promotional materials also, and also in the financial reports that accompany financial statements. So a typical mission statement will include this: why the entity exists, what are the type of the business, what are the products and the service they offer, and their policies and standards of behavior, their values and cultures. You don't have to know in depth, okay? You will not be asked to draw or draft a mission statement of a company from scratch, okay? That you will not be asked in APM. Just knowing it will help you, okay, to measure performance. That's why we are starting with mission statement, because it starts at the top. So let us go through this example of various company who have set their mission statement. So first let's start with the Microsoft. Microsoft, if you see what is their mission statement, they are best known for their computer software product. So their mission is, our mission is to empower every person and every organization on the planet to achieve more. See, mission, if you write, okay, mission statements are not very long paragraphs. You will see they're very short sentences, very crisp and clear and very concise. But if you see the corporate objective, it's the same only. They're trying to achieve your mission only, but they will quantify it. It's more financial. You can measure it. How do you measure that you are empowering every person is successful or not? Through corporate objectives. You will set KPIs. That's how you're going to measure. But it all starts with where? Mission statement. Why? Because based on your mission statement only will be your corporate objectives. If your mission is something else, corporate objectives can't be differ from that. Okay. Next, Coca-Cola. Coca-Cola, as we all know, is a very global brand. What is its mission? Coca-Cola's mission is to refresh the world, make a difference. Then we have the next, which is a Japanese holding company that offers financial services. So their mission statement is we grow and prosper together with our customers by providing services of a greater value to them. So how do you measure this? You have to see all those objectives relating to customer and quality. You can work on cost. Okay. So we aim to maximize shareholders' value through continuous growth of our business. We create a work environment that encourages and rewards highly motivated employees. So now you need objective focusing on employees also and customers also. Now, what is the impact on performance management of all this? Having a mission statement gives certain advantages. Number one, it focuses an organization strategy, okay, to develop a benchmark against which to measure your strategy. Mission statement is like a benchmark. Otherwise, you will not know where you are landing. Next, it guides the individuals in the organization that this is where you have to go. Okay. So everyone in the organization has to work towards achieving the organization's mission rather than all working towards some other objectives. Third advantage. Mission statement contains information about the organization's values. You will see these values are not considered in any other statement. You will not see in the financial statement or anywhere else. So this will ensure how the staff has to behave and it has to be consistent with the organization's value. Okay, but there are problems with the mission statement. Number one, there are too many mission statements and they are full of meaningless statements. Second, many organizations might actually not follow what they say. They might just use the mission statement as a public relation tool. Now, so the performance measurement that are chosen at the strategic level, they should aim to measure how well the organization is performing against its mission. You see, mission is a criteria. How will you know against what you have to perform? You need a benchmark. That's your mission. That's why we start with the mission first. Now you understand why we start up with mission statement and how it is linked with performance measurement. To know whether you are performing well at the strategic level, you need a mission statement and you have to see how your organization is performing against those measures. Okay, let's say if your mission is to maximize shareholders wealth, you actually have to maximize their shareholders wealth through the ratios and the numerical methods or non-numerical you have to, such as one measure of maximizing shareholders wealth. One measure is economic value added, which we are going to cover later in detail in lecture 10. Okay, so this will be chosen. Next, the difficulty of selecting the performance measures. There's a difficulty also because missions are very general. Missions are stated in a very general term. For example, mission could be to maximize wealth of the shareholders, but what does it mean? Because it could mean different things to different people. So that's why to develop specific measures that are relating to this mission, it's difficult. It's a challenge. You need judgment. So you first need to measure the specific measures you have to develop before you can actually measure. Okay, before the performance can actually be measured. Otherwise, the performance that you measure will be meaningless. Okay, so these measures that are selected should be relevant to your mission also. Achieving targets for the measures should translate into accomplishing organization mission. What does that mean? See, whatever the target you have set, you are measuring it. Why? Because ultimately you are measuring it to accomplish your mission statement. Otherwise, there is no it's meaningless if you just set just some random target and you are achieving those target also, but it's not taking you towards your mission. It's meaningless. So activity 1, let us go through this, where we have to discuss how cheap and easy can measure whether it is succeeding in achieving its mission or not. Okay, so cheap and easy is a supermarket based in Homeland and their mission is to maximize shareholders wealth. They want the customers, okay? They want to provide customers with everything they need at the best price. So it's very difficult to measure shareholders' wealth, what is the best price means. Now let us break down this into two things. See, this mission statement can be broken down into two things. First part, shareholders' wealth. Second part, best price. So let us first answer the shareholders' wealth part in the first para. Okay. To maximize wealth of the shareholder is very unspecific. What does maximize mean? Does it mean giving best return to all companies? Okay. And also you see there is no deadline also by when you have to achieve. So the company can measure the shareholders' wealth by using techniques like total shareholder return or economic value added, which we are going to cover in lecture 10. But even though the increase in wealth you can measure, but it will not be possible to answer the question that was the wealth of the shareholders maximized. That question will not be answered. Next, giving everything to customer at the best price. This is also challenging to measure. Okay, because you have to benchmark your prices against competitor. Also, providing determining whether the company is giving everything is very unspecific and very subjective also. What does it mean everything? Okay, so does it mean everything they need to eat or everything in the house of the customer? We don't know. So like mission statement, measuring whether the mission statement has been achieved is also difficult. Next, now linking your strategy with operation. So once you have set your mission, vision and corporate objectives, then you have to break down your strategic objectives to the lower level operation managers who are going to work towards achieving those objectives. So we are now going to develop from the primary objective to subsidiary performance objective. Okay. So as article written by the previous examiner, they state if there is no link between your strategic and operational planning, the result will be unrealistic plan, inconsistent goal, poor communication, inadequate performance measurement. So your strategic planning and your operational planning has to be linked. Whatever the top people are planning and whatever the lower level people are planning or middle level management are planning, they have to go hand in hand. There should be harmony between them. It cannot be two separate goals. For example, strategic goal is to differentiate and your goal is cost cutting. Not going. Okay. So this is how we do. This is the steps. First we start with the mission, then the goal, then the objective, then the strategy we set to achieve those objectives, which of course mean achieving mission. Then from strategic we go down tactics, that is the middle level management will implement those strategy, and the lower level, the managers will have the operational plan to achieve. So overall the operational plan is to what? Achieve your mission only. So goals may be defined from the mission. So your goals will specify what the organization wishes to achieve. Everyone has a goal, right? I want to achieve this, I want to achieve that, within this year. So usually goals are very general and very broad in scope. Next, corporate objectives. Corporate objectives are developed from the goals. See, from mission we develop goals, from goals we develop corporate objectives. They are linked. Okay. So specific goals. While a goal specifies what the organization wishes to achieve, let's say they want their goal is to improve customer satisfaction. Objective will set out the what organization needs to do to achieve the objective. It's like an action plan. What action organization has to do to achieve that goal. For example, to improve customer satisfaction, you have to provide best quality product. So you have to work on your quality. So corporate objectives will apply to the organization as a whole. Okay. So these are your main objectives, which relates to the mission. Also, after main objectives, there are some subsidiary objectives also. There are other objectives of the organization, which is for the various stakeholder groups. But remember, together with the subsidiary main, everything has to relate to achieving your mission only at the end. We are just breaking down that big chunk of information to small uh, pieces. For example, another stakeholder group, their objective might be to reduce pollution by so and so percentage. Okay. Next. So there will be a hierarchy of objectives. In the hierarchy, there are two things. One is primary objective, one is secondary objective. Primary objective is to profit growth. Secondary objective to support that profit growth would be to improve your product quality or more efficient use of resources. Each business unit will have objective which will overall support the corporate objectives only. Now, strategy here is a longer term plan. That means what area the business wants to be in, which industry the company wants to, and how they are going to compete in various markets. Tactics relates to how they are going to compete in that particular business area. And operational plans are very detailed, they are very short term. See, we have other models to ensure that there are consistency between your strategic and operational plan. For example, performance pyramid that are developed by Lange and Cross, which we are going to cover in lecture 15. Because that is at the end, once everything has been done and we have to measure the performance. That's why it is in lecture 15. But right now we are in the planning stage. Okay. Then objectives has to be smart, otherwise it's not going to be useful for you. Okay. So SMART stands for S, specific. If your objective is not specific, if it's general, you can't measure it also. For example, not to, for example, to improve inventory management. This is not specific. But if you say you want to reduce the frequency of the stock outs, you want to reduce the average inventory level, or you want to hold inventory in a better condition to reduce wastage, these are more specific statements. You can't say to improve inventory management. That is unspecific. Next, measurable. Your objective has to be measurable. Okay. So you have to identify metrics that can measure, that you can use to measure. Sometimes it's difficult. For example, we say customer satisfaction, but how do we actually measure customer satisfaction? This you can do through customer service scores and all. Okay. Next, third, A stands for achievable. So an objective should be such that it should not be too hard to achieve, otherwise you will be demotivated, and not too easy also, otherwise you will become lazy. It has to be something which challenges you, which moves you from your comfort zone, but not too hard also. It has to be achievable. Okay. Next, relevant. Okay. So managers has to understand how achieving that objective is relevant for them, how it is relevant for the organization's success. Managers have to feel that they are part of this, that they actually are cooperate, they're involved in this. Okay. Next, time. Objective should be for a certain time period. It should have a deadline. Next, use of CSF. Very important. Okay. So you first have to define what is CSF, and then you need to focus on that, because it's very important. As the word says, critical. Critical means it's very important. What is discipline? It means two things. These are the areas where an organization has to perform well. It's not an option. It's compulsory. Mandatory they have to perform well in these areas, but not all areas. There are few areas. Few critical areas where organization must perform well if they have to succeed. Number two, these are those features that are valued by the customer, and customers are willing to pay more also for these factors. So in this area, you have to outperform your competition. Critical means very small number of a few factors. You can't have so many 10, 15 CSF, okay? Maybe 2, 3. So management, after you identify that these are your CSF, you have to identify your key performance indicator to measure those CSF also. Now, how do organizations identify their CSF? In 1970s, okay, there were 5 primary sources of CSF. First one, your structure of industry that you're based could be your critical success factor. Could be a reason why you're succeeding. Okay, any industry has a set of CSF that depends on the characteristics of the industry itself. For example, if you are in the car industry, your critical success factor is your efficient dealer network, because for car there are so many parts, it has to be assembled from so many places. Not one company is making all the parts. Brake is someone else is making, then the seats are made by someone else, Then the painting is done by someone else from somewhere outside the, they're in different countries. They're based in different geographical location. That's why it's very important for you to have a very efficient dealer network with all those. Otherwise, you can't assemble the car. So for car industry, it is this. Next, competitive strategy could be another critical success factor. Also, your industry position and geographical location. Sometimes you're geographically located in an advantageous position, or your position is such that you can take an advantage of few things. And also, companies' competitive strategies differs, okay, based on the industry. For example, if you're in the niche, you're very much likely to go for a differentiation technique rather than low cost. Okay, so you can charge a higher price also. That is your critical success factor, that you are the niche, you are in the niche market. Third, environmental factor. Because now there are changes in the environment, it can lead to some new critical success factor. It might not be there, but it is leading to new critical success factor. For example, energy supply availability could be a critical success factor during oil shortages. Fourth, temporary factor. Temporarily, they are your critical success factor. Okay. Why? Because currently the performance is below an acceptable level. But in the longer term, those problems will no longer remain a problem, and they will not even need a special attention. So that's why this critical success factor are only temporarily. Fifth, functional managerial position. The function of the manager will determine the critical success factor that are relevant to that manager. For example, product quality and inventory control are very much critical success factor for a production manager. It might not be for a finance manager or a sales manager, right? But for a production manager, they have to ensure that product is of good quality and inventory control also. Now, alternative classification, internal versus external. Every manager will have internal critical success factor and they will have external critical success factor as well. Internal is relating to the department and the people they manage. Okay, so this internal CSF, they are ranging across diverse interests as human resource development or inventory control. Next, the primary characteristics of internal CSF is that they deal with issues that are entirely within the manager's control. External are less under the manager's control, such as the availability or the price of a particular raw material. That is not in your hand. Whether the raw material will be available or not, whether the price of the raw material will be high or low, not in your condition. Next, classification, monitoring or building versus adapting. So some critical success factor you need to monitor. Continuously you have to monitor. And they are often financially oriented also. For example, we will keep monitoring the actual performance versus budget. Okay, another monitoring critical success factor is your personal turnover rate. Next category is building. This is more strategic. Okay, so they monitor how well the organization is changing in the direction that is required to react to the long-term changes in the environmental environment. For example, because the environment changed, they are more towards sustainability. You have to come up with new products that are actually more green, I would say. So you are building the critical success factor by coming up with new products because the environment changed. That is known as building critical success factor. It was not there, now you are building it based on the changes in the environment. Now, the examples of CSF. So if you are in the car manufacturing, your critical success factors are styling of the car, efficient network dealer, as I said, and tight control on the management cost. Because cars, you can't differentiate cars so much. Okay. Yes, the brand might be different. You might be willing to pay higher price, but in terms of the usage, car is car. Cars are used to drive only. Whether it's Mercedes, BMW, or normal Toyota or Hyundai, whatever. Next, food processing. In the food processing industry, critical success factors in how good your distribution channel is, and are you coming with new product, and are you doing effective advertising. Next, life insurance. For life insurance, the CSFs are your innovative policies and products. For supermarkets, it is based on the shelf, the good product mix, and their product should be available also, should be available on the shelf. These are more contemporary critical success factors. The examples are service oriented. So being service oriented when working with our customers. You achieve order fulfillment excellence through online process improvement. Align incentives and rewards with the employee's role for the increased employee satisfaction. CSF should be smart, like objective. Now, CSF and KPI. So, KPIs are indicators or metrics that measure the most important aspect of the organization's performance. Not every aspect, most important aspect. That's why it's known as key. Now, linking the two. KPIs will measure how well critical success factors are achieved. So, KPIs indicate a defined performance level required to achieve a critical success factor. Critical success factors are covered in different contexts in different chapters. Okay. For example, we are going to cover them in lecture 5 also and lecture 15 also. Lecture 5 in the context of the 7S framework and lecture 15 in the context of the balanced scorecard. Now, so based on the industry, we are going to go through the CSF and KPIs. This table is going to be handy for you in your exam. So, if you are in a motor vehicle industry, efficient dealer network, how do you check whether you are achieving that efficient dealer network? By the number of active dealership. If it's increasing, that means yes. Next, customer service satisfaction scores also. If you're in the pharmaceutical, effective research and development for new drugs is a critical success factor. How do you measure number of the patents filed? Research and development expenditure as a revenue, percentage of revenue. If you're a cost leadership industry, your success is how well can you achieve economies of scale. And your KPIs will be production cost per unit and gross margin percentage. If you're in the differentiation, if your competitive strategy is differentiation, CSF are number of unique products or features valued by customer. KPI is to measure that. Customer perceived value score, percentage of products returned. Now, meaning of operation. So Anthony's model described 3 levels of management that I have covered in lecture 1 also. Strategic, tactical, operation. Okay, operations are day-to-day activities. And one of the biggest challenge of the performance management is ensuring that operations are working towards the organization strategy. That means performance of operation should support the corporate objectives. That is the meaning of this. So there are 5 main operational performance objectives which supports your corporate objectives. First, speed. How fast can a company deliver their product and generate the sale? Okay, so this objective concerns issues such as the time it takes to manufacture and process one or more products, or the time it takes to research and develop new product. Next, variation. Okay, so how much variation is there in the unit cost of a product, which is measured by changes in the factors such as the volume and the variety of products. Remember, products with a great variety will have a lower volume and a higher unit cost. So it affects the product profitability also. Third, quality. Quality will be measured by how well a product conforms to their specification. Also, how desirable the features of product are. Product reliability and durability, it has to be long term also. Ease of servicing, how well it performs in the intended function and how much customers believe in its value. Next objective, flexibility. Flexible operations. Okay, they can configure the product lines to deal with various requirements and adjust the product line quickly to the new conditions. If you are not flexible, if you are rigid, it's very difficult. So the latter, if you see, flexibility is also linked to the speed objective. If you are more flexible, you will achieve your speed objective also. So that's why a company should be able to produce different quality product varieties and adapt their operation to suit various market conditions. Dependability. You have to timely deliver the product to the customer. Otherwise, it's not going to be beneficial. Operation will fail. Okay, so the product's ability to function in an intended way Consistently over a long period of time means it's dependable. You can depend on that product. Next, objective is. So other examples of attributes or characteristics of the operational performance will include, apart from those five: security, transparency, best practice, and asset management. Your performance should be secure, it should be transparent, it should be best practice, and also asset management. And at the operational level, performance measurement may be assessed using a framework, performance pyramid, and Fitzgerald and Moon building block model, which we are going to cover in lecture 15. Now, importance of planning and controlling activity. Management accounting has two activities. First, planning, second, controlling. Planning, how do they do? Planning stage, they ask questions like where we are, where we want to be, how we are going to get there. Controlling means they are comparing the actual performance against a plan, and then they are taking action to improve the performance when it is deviating from the plan. So at the higher level in the hierarchy, most of the managers are involved in planning. Controlling is done in the lower level, lower down the hierarchy, and planning becomes less important. So setting a mission is a what? Not a controlling, is a planning activity. So mission statement, it is usually, if you see, because it's a planning activity, it is usually measured in terms that you cannot measure, such as maximize the wealth of shareholder. So if you try to control at this level, it's meaningless. You can't control at the top level. Next, corporate objectives. Both planning and control are required here. So realistic objective has to be set, that is based on your mission, and analyze the internal and external environment. So analyzing internal and external environment is a planning process. And to have an effective process for evaluating the organization performance against the objective, you have to take action. So here control is also an important activity. At operational, it's not more planning, it's more of controlling activity. Okay, so we are taking controlling activities to ensure that we are meeting the objective. So if you have achieved the objectives in the operational level, means you ultimately you have achieved the objective at the higher level also. Now the performance planning gap. There is often a gap with what actually how you have performed and what you have planned that you are going to perform. That is known as performance planning gap. We will have to try to close the gap, not widen the gap. If the gap is more, it's not good. So the performance planning gap is the difference between your planned objective versus your actual objective, actually what you have achieved. So this is a diagram. You don't have to draw this diagram, of course, but understanding this will help you a lot. Okay, here. So you see, as the time proceeds, go towards the right. Both are increasing only, your planned performance and actual focus. But you see this hard line, this is your focus performance, and this dotted line is your planned performance. And the difference between these two lines is your performance planning gap. So now some examples of this gap. An organization has included a strategic objective to reduce its emission in the environment. Okay, so when you're evaluating the emission of the current activity, you have found, see, your mission was what? Objective was to reduce the emission, but when you're checking, you have found out the mission level is increasing only. Okay, next, a business is aiming to grow their market share in 3 major markets. And once you have evaluated the current position, you have come to a conclusion that there is no change in the market share, and also your product is not accepted also among the customer. Third example, the objective is you want to penetrate the consultancy business in a cryptocurrency assurance service, but once you have evaluated the capabilities, you are lacking in the workforce. Okay, you don't have the expertise that is required of your workforce. and also the current training that is given in the organization will not help you to deliver those goals. So how do you fill this performance gap? So if you want to maintain the status quo, remember, it will not close the planning gap. You have to take some action. You have to commit, allocate resource, and also focus on areas to close the gap. So strategies, you can use the strategies. For example, that are included in the models that I've covered in lecture 1. We have gone through the strategic models, right? SWOT analysis, best, then Ishikawa fishbone analysis, Ishikawa, which we have not covered yet, which we are going to cover, and other applicable models can be used. Now, let us illustrate from the examples above to achieve the three objective that we have failed to achieve. First one was emission target. So to achieve the emission target, organization can implement an integrated reporting system which will emphasize the measurement of emission from its activity and also train the staff to think about the emission first. Then the employees will be engaged to think of the solutions to integrate emissions reporting within their regular reporting process. And then they will brainstorm to change the activity so that they can reduce the emission. Okay. Next, to achieve the market share where they have failed. Okay. So to achieve the market share target, the organization has to analyze competitive and external environment and the value chain. So it identified that there's a market niche. Okay. Once they have analyzed the market and all, the result identified that there's a market niche where offerings, if they offer in that niche, it will be strongly accepted by the customer. And also, if you deploy some additional custom access point, you can scale it up both in the digital and the physical space. So it also identified a smaller competitors. There are smaller competitor with some local presence, but you can acquire them and reduce the competition. Third, where you lack the expertise in the consultancy service in the cryptocurrency. How do you overcome that? By giving more formal training and skills to develop in that area. So you work with professional advisor to expand in your curriculum, train the employees, give them responsibility with some small risk exposure earlier on, not high risk but small risk, so that they can get some experience. Also, the strategy also resisted employing external. So the organization strategy is such that you do not want to employ external with this is expertise. Why? Because they are very expensive. So the focus is to build on the long-term relationship with customer through in-house knowledge rather than buying external people. So that's it for this lecture. Now, this lecture we have covered section A. Lecture 1, lecture 2, lecture 3 all are focusing on section A only. We are still in the strategic planning and control. Okay. So here we have discussed the purpose, structure and the content of mission statement. We have gone through the strategic objectives in that hierarchy by having strategic objectives, then main objective, then subsidiary objectives. Then we applied critical success factor in developing performance matrix. We identified the characteristics of operational performance, the 5 factors: speed, reliability, dependability, flexibility, and quality. Then we discussed the importance of planning activity against controlling activity at different levels, that is strategic, tactical, operational. Then we explained the performance planning gap and how to close the gap. So let us summarize the lecture. The objective of an organization can be formed in a hierarchy. Okay, and the hierarchy starts with the mission at the top level. Mission is, okay, the mission identifies the reason for the existence of the organization and often it is written down. So managers can actually see it and they can use the mission statement to develop their strategy and employees are aware of those mission. Short-term operational targets are then set to achieve finally your long-term strategy only because they are linked to the long-term strategy to ensure that day-to-day operation is leading to achieve your long-term strategy only. The CSF approach, where you are involving, where you need to excel in the small number of factors. Okay, and to to measure the performance against CSF, you have to measure them using key performance indicator. And CSF are determined by several factors such as industry structure, competitive strategy, industry strategy, geographic location, environmental factor, temporary factor, functional, managerial position. Okay, you can go through that table that I've gone through. Then performance management system has to ensure the performance of the operation that supports the strategic objective of the organization. The planning gap is the difference between the planned objective and the outcome that will occur if the current activities remain unchanged. The two technical articles that you have to read are performance indicator and critical success factor on your ACCA website. Please do and read because it gives you a lot of wide knowledge also apart from what I've covered in the lecture. Thank you for watching and I shall see you in lecture 4. You can watch my previous other two lectures, lecture 1 and 2 under my APM playlist, and also if you want to access these slides from me, you need to email me where I can share you the details of payment. Thank you for watching and I shall see you in the next lecture.